Good evening. It is 5:22 p.m. October 13th, Thursday, the long anticipated CPI data day, and it for sure delivered a whole lot of volatility and volume. I'm going to do my best to describe what happened today in the markets in my own view, because starting with the CPI data. Right, we got the CPI data in the U.S. came out at 8:30. We had the core CPI and the normal CPI year over year and month over month. Everything came out hotter than expected, above the forecast and above previous or similar to previous in the year over year numbers. So this means on a fundamental basis that inflation is not at its peak. It is continuing to grow. It is continuing to stay high. The Federal Reserve has repeated itself time and time again that its primary mandate, its focus, is determined to bring inflation down by any means necessary. They're going to hike rates and keep them up until the inflation comes down to 2%. So they're going to bring their monetary policy into restrictive territory. They're going to shrink the money supply. And this is negative for assets, negative for the stock market, negative for gold, negative for commodities, but positive for the US dollar. Okay? But here we see US 30, US 500, the stock markets all went up. VIX stayed flat, and dollar went down. This is the opposite of what this fundamental data implies. Now, why is that? Well, I'm going to do my best to describe that using the price action and the fact that we are so deep within this bearish trend here that the additional inflation did not have enough juice to bring us down into new lower lows, given that we are already, if I go back to the weekly time frame, we are at such significant lows after aggressively coming to the downside, printing new lows, testing this previous weekly low. And also, if you look to the left here, there's a giant weekly order block that we just tapped into. So there's a lot of liquidity in this area that we tapped into and rejected. So based on the technicals, we're rejecting this massive previous structure level, previous liquidity level towards the left. Now, that's not enough to say that, well, that's why markets reversed. Well, the fact of the matter is that once the CPI data came out, we had a deep sell-off, right? A sell-off, we broke new lows, and everybody was saying, oh, inflation's high, Fed's going to have to raise interest rates. We're just going to drop and drop and drop. Well, the market makers had different ideas. They've already been short for months, for weeks and months. They've been short, they've been shorting the market, and now we are at these historical lows. We're at this historical low, and if I zoom out to the left, previous major buy-side liquidity zone. So in order for the stock market and for traders to keep pushing the markets down, well, there needs to be enough liquidity. There needs to be enough people to continue to sell on the way down. Well, what happened here is that basically the sellers used this opportunity to liquidate out of their positions at historical lows. So they're making an amazing amount of profits, and they're starting to take profits here. And we see that with a major reversal and actually printing back above this previous consolidation area. So that's basically what it is. I mean, in terms of fundamentals, the fundamentals are the same. Inflation is way too high. The Fed's going to continue raising interest rates. They're going to raise another 75 basis points at the next meeting. They're going to raise probably another 50 to 75 the meeting after that. And they're going to hold the rates up for the entirety of 2023. This is based on what the Fed has said. And they said they're going to hold it there until inflation is down at 2%. They're ready to bring inflation down at all costs because they have no choice. They have no choice but to bring inflation down, because if they pivot, the delusional pivot prayers, if the Fed pivots, well, the opposite is even more destructive than a recession or even a housing crisis. Because if they pivot with inflation over 8%, we're going to go into hyperinflation. And hyperinflation is not good for anyone. Not good for the rich, not good for the poor. It's a total societal collapse, economic collapse. We're going to have a depression. And this has happened in history before. And the Fed knows that. So the Fed knows that they have no choice but to be aggressive and bring inflation down. Now, inflation is not down, so they have more work to do, right? So in my opinion, this right here, this news release was a liquidity grab, so that sellers that have been selling from up here, if I zoom out, higher levels from the all-time highs, they've been selling all the way down. Now, at premium prices, they're buying it back up. They're taking their profits. And now we're entering a pullback. So I anticipate, since the news was so bad that it just solidified that there is no pivot whatsoever. This just solidified our bearish bias. And here we're just entering a pullback where short sellers are taking profits. And now we could see a continuation of the pullback, potentially to retest previous levels here, either sell off from this level once sellers load back up in sells at better prices, or we could even continue back to the upside and sell off from the daily break of structure here, 3882, and still be extremely bearish on the higher time frames. So even if the stock market, everyone's losing their mind because we went down and then we closed up like 2.5%. We went up from 3,500 and closed at 3669 in a matter of a few hours, like a major reversal. So everyone's going to be like, "Oh, this is insane. This is definitely the bottom." Blah 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 blah. But the fact is, the fundamentals don't change. So this, in my opinion, is just a profit-taking opportunity, where the Fed's, in this case, selling the rumor and buying the news, taking profits here, with all the liquidity, trapping these short sellers and taking profits, providing exit liquidity, so that they could get out of their positions at record lows. However, with all of this price action, this quote-unquote major reversal it's actually insignificant in the terms of the higher time frame structure. If you zoom out to the daily time frame, where is this bullish structure? Where is this reversal? All I see is prices consecutively printing new lower lows, an aggressive lower high here, and now just a double bottom at new lows here. So where's this reversal? I see just some exhaustion and a potential pullback. And again, we could pull back all the way up to 3,900 and still be extremely bearish. If you look at this trend line here, we could even fuel some more delusional hopes and pour some more suckers in the market as we come up and potentially retest this previous level, 41.50. And even there, we're going to be respecting the bear market structure here, and we just sell off. So it's not that we're having a reversal. It's just the fact that everyone that was available to sell, all the whales have already been selling. They've already been stacking sell positions from these highs, and now at these lows, the simple answer is that they're not willing to continue selling at these lows here. They would much prefer take their profits, pull back, sell at better prices. So we're still extremely bearish. We're just having to note here that we may enter a pullback, and I'm going to adapt accordingly. Right? So this does not change the fundamental bias whatsoever. This just means, this is just an analysis of order flow and knowing where we are within structure and understanding that, understanding the way that the whales buy and sell and take profits, and how they run their algorithms to be profitable. They're not going to sell at all-time lows. They're going to take profits at all-time lows, right? I know they're not all-time lows, but all-time lows within the bear market. Now, looking at the U.S. dollar, we've got similar price action because we've just been stuck in this range the entire week, with a couple exceptions of a dip back in and then a spike back in, and now we're pulling back here, right? But if you watch my analysis from Monday, Tuesday, Wednesday, even this morning, what I've been saying is that the US dollar is bullish. We could even come back to retest this, from this new high here. We could retest this level, be extremely bullish. We could even come back down to this level and be extremely bullish. Heck, even if we come down to double bottom here, we're still extremely bullish. So, knowing that the fundamentals don't change here, but knowing that the market moves in waves, right? It moves in phases, and for a reason. Here, we did not have enough buyers to step it up. That's it. Instead, the buyers took some profits, entered pullback. So now we got to adapt accordingly because we are starting to create a lower high here, and we may end up getting this pullback structure. But as long as it doesn't break higher time frame structure, we're still maintaining the fundamental bias. We just need to adapt accordingly and wait for, if we come down, let's say to this level, wait for buyers to step back in, start printing new higher highs, and then know with confidence that the bulls are back, right? So be prepared for some choppy price action, potentially some ranging, until we get that confirmation that, okay, we have some clean reversal, some more volume, some shift in market structure, and consecutive, a series of bullish events like strong bullish candles, higher lows, just tie it in with the market structure and the volume at that time. Now, I'm going to review the price action, and I did not set up any trade ideas this morning. It was basically data dependent, and I waited for the data release, and because the CPI was hotter than expected, I had a bearish bias on gold and GEU. Now we had this explosive break to the downside, and unfortunately I did not keep my sell limit at 1681 because that was going to be an amazing trade. So I should have kept my sell limit. I closed it prior to CPI because I thought maybe we're going to get a deeper liquidity grab to 1689, and I figured I'd just adapt into the trade, based on what the data comes out as. So I missed out on an amazing trade. 1681 would have been a banger here. Just fell all the way down to the next zone, 1644. So that would have been a really good trade. I'm a little salty that it didn't get into that. However, once you had the break, we had multiple opportunities to get into sells when we're retesting this previous key level, 1654. We got a double top, triple top, and sells back to the lows. And this may look like nothing, but when you measure it out, that's a 100 pip range. So 1654 to 1644, that's 10 bucks. That's 100 pips, right? So these are good trades. Wait for the dust to settle and take a nice little scalp here from key level to next zone, 1644. So great little trade here. However, we got the reversal like we did elsewhere in the markets here, and we just basically went to correct the entire move here. However, if I zoom back out, let's zoom back out to the 4-hour here. Now we're still maintaining this bearish structure, right? We had this consolidation range. We went to break, rejected previous structure level, and now we're back within this range. So I'm anticipating more choppy price action, potentially more ranging. Maybe we could come double top if we're lucky. Could get a good trade to take off the lows here if we're going to do a deeper pullback, and we could even end up rejecting this level because we're still within this bearish structure and the fundamentals are still bearish, right? Just need to adapt that. We've got some buy side liquidity right here, right? So I'm not going to be trading within this range. I'll wait for potentially retest of this major structure level, the weekly and the daily and the 4-hour supply levels, for a potential sell-off from here. But going to be cautious here because even if we sell off from the top, we may end up again entering some pullback structure and coming back up to 1725 areas and continuing in some bullish pullback structure, right? So obviously I need to delete my zones and give some fresh analysis, fresh key levels and everything. But the analysis stays the same. The analysis stays the same here, right? We've got, so zoom out to the daily time frame here. With all that volatility, the daily candle is still closing right at these candle body lows. So this was essentially a liquidity grab on the way down, but we're also closing below weekly break of structure, below this daily break of structure, after rejecting previous daily supply levels, right? So we are still respecting higher time frame bearish structure, but we are printing some very messy price action, sideways price action. So it's not the best conditions to trade. I would prefer to wait for some cleaner price action, and I'm going to wait and see. I'm going to see over Asian session if the investor sentiment stays the same, or if we end up fading out that optimism, or if we continue perhaps breaking back above this range, then we could adapt to buys accordingly. But if not, then sells are still active at 1681. Now quickly on GU. GU is a different story here. So let's analyze this one separately, because we had some GBP news overnight and over the past few days about basically the Bank of England supporting the economy. We also got a lot of headlines, some optimistic headlines from the new Prime Minister Truss and Kwarteng, which is the finance minister. So we got some positive, optimistic headlines about tax cuts and things of that nature. And the resulting investor sentiment was very good for the pound. Across the board, the pound was by far the strongest performer. Now, if we're breaking down the charts here, So if you notice, we actually had similar price action to what we got today on the stock market and on gold here. We got a significant break, but the break got faded out and we closed back above the range, rejecting previous demand zones. Once we have this bearish structure sort of flip on us, where we got a break, and instead of continuations to the downside, no, we got sellers take profits and bring GU back above support, back in the range. And what did we get? We got a continuation to the upside as the liquidity was grabbed and buyers stepped in with the positive news. But even within this structure here, we're still below key daily breaks of structure. We're still below, weekly break of structure. So the higher time frames are still extremely bearish. Now I just need to adapt, because now on the 4-hour, we've just printed a new impulsive higher high. So at this point, we could continue. If we get a pullback to retest these levels, we could potentially get a continuation. Even if we come down a little bit lower, we can get a continuation to the upside here. But if we fail to break these key levels here in this key zone, we could end up fading out this optimism and have US dollar continue to dominate here. So overall, GU exploded on the dollar weakness and on GBP strength. So I'm going to be adapting on the short term as a GU bullish bias, but also noting that I'm only going to be looking for buys at prime areas, like if I retest one of these levels right here of structure, and I'm not going to be buying like right below our weak higher time frame bearish liquidity zones. I would wait for confirmation of a break to the upside, and then buy above these key levels for a potential fill of this range. If not, see if we potentially range, exhaust, and then just fail to break this level and resume that downward trend. So that's it for today. Very looking forward to see how this develops. But based on the price action, based on what happened today, again, I'm just going to recap really quickly. The fundamentals stay the same. It is extremely bearish for risk currencies, risk assets, and anything tied to the US dollar, because the US dollar is still fundamentally bullish, because the Fed's going to have to continuously and aggressively fight inflation with rising interest rates. And we had this potential short-term reversal based on profit taking rather than some Fed pivot prayers, right? So we're just entering a secondary phase of market where we are potentially going to consolidate or pull back in order to generate more liquidity to continue to the downside.